Pronunciation. It's not an easy one. Good morning, everyone. First, I'd like to thank the organizers for having me here today to speak, and thank you all for your attendance and your attention today in the room. To start the slides, thank you. And just press the button to advance. Okay, legal disclaimer. I'll let you guys read this later on. I'm going to start with a story today about why I'm here and really why Artemis Growth Partners is what they are. I'm going to go back to 2007. It was really my annus horribilis. I lost my sister, who was 43 at the time, to cancer in December 2007. My mother was diagnosed with terminal cancer in February 2008, and she succumbed to her disease in April of 2009. And my sister and my mother's stories really couldn't have been different at the end of their lives. My sister, who was in California, had deep bone pain. Her cancer had progressed into her sacrum, and she was fighting really deep bone pain with heavy opioids. She had a pain pump installed, and she had progressed. As we all know, opioids, you reach homeostasis in your body. At some point, the titration level of opioids don't really give you any pain relief, and actually that next press on the pain pump will kill you rather than giving you pain relief. So she was luckily in California. Her doctor first prescribed to her Marinol and then flour, and she was able to back off on the opioids and have better treatment. So the efficacy of cannabis was upfront and very close and personal. My sister at the time had a 6-year-old boy, 2 twin 4-year-old girls, and when she was on opioids, she really wasn't even in this plane of existence. She was off in someplace else. And so cannabis allowed her to really have a more normal life, to connect with her family. It changed my experience, it changed my sister's experience, our entire family's experience. And I'm 55. I was raised in the United States under Nancy Reagan, just say no to drugs. And it was an eye-opener to see that cannabis really was a true medicinal product, and was something that I took from that cannabis should be a human right, that we should have access to the plant, because the history and the politics of cannabis are fraught with stigma, with racial injustice. It has nothing to do with the plant itself. So at the time, I was a banker. I was managing director and co-head of our global healthcare services investment banking practice at Goldman Sachs. When my mother got sick, I deactivated from Goldman, took her through her last year of life, and coming back into that, I didn't really want to go back into banking. So again, 2007, 2008, cannabis wasn't really investable for me at the time, so I ended up starting an impact fund. It took me to Latin America. We actually ended up winning an award called Best for the World from the GEARS service, the Global Impact Investment Rating Service, for impact, because we were creating jobs, we were creating economic opportunity in an environment that really had none in Central America. And I'll fast forward now, take my story to 2015. Another Goldman Sachs investment banker, a guy named Henry Porter, had left Goldman to start a cannabis business in Maryland. And a third Goldman banker, Nick Vita, who was my associate when I was a managing director, had started a group called Columbia Care. These are two people that I respected, I knew very well, and in 2015, cannabis was opening up to being an investable category. So I started looking at the space, studying the space. Henry and I actually started collaborating and discussing what Artemis could be, and we started investing really in 2017 with about $5 million of capital that we'd raised, 2.5 from partners and 2.5 from friends and family. Nick, who again was a junior banker when I was a managing director, is now the head of Columbia Care. Columbia Care is merging with Cresco Partners and is now, I think, the largest by revenues cannabis company in the world. So we've gone from, in my short experience, a time that cannabis was really outlawed to an investable category to now public companies. We at Artemis looked at the space with our $5 million investment and started placing bets along a framework of what we thought impact was. And a lot of that came out of our experience. We couldn't understand the paradigm where we, as really white, rich males coming to an industry, couldn't understand how to invest in cannabis without coming in with an impact lens. So we really created a dynamic of 5 points of impact. The first is compassionate medical access, which is my sister's experience, an exit to the opioid crisis. Third is social justice reform. Fourth is really everything outside of intoxication, health, and wellness around cannabis, because as we know, 113 known cannabinoids. They have promise for medicines, for health products, and really not to live longer, but to live better. Cannabis should be part of your life. And then the fourth area was regenerative farming and the hemp industry, and how industrial cannabis really disrupts so many different industries, from pulp and paper to textiles, fabrics, bioplastics, biofuels. Our thesis was impact should be at the forefront of cannabis. So we took our $5 million investment, we started investing in companies in 2018. We've now parlayed that into, I guess Artemis is now, I think, one of the top 3 or 5 investment platforms in the world for cannabis. We manage about 376 million of assets under management into cannabis. We are 100% focused on investing in cannabis companies, primarily private companies, although we do have a public portfolio because we've had 11 exits of companies that have gone from private into public. So I'll stop with the history of Artemis, but I'll just saying that as an investor, this is a personal mission for Artemis to destigmatize cannabis, to create an investor class around cannabis, and to really bring cannabis into the limelight because we think that the dynamics here are so compelling. So as far as where we've been investing, we stepped back and took the thesis that cannabis as sort of Prohibition 2.0 is going to follow a lot of the same trends that we saw in alcohol in the 1920s. And for us, that meant that branded product. So we followed sort of Ben Kovler, who's the head of GTI, a publicly traded US company. His family, they were bootleggers in the 20s. They owned the brand Maker's Mark. And his thesis was that brand and distribution are two categories of defensible value creation in cannabis. And we really absorbed that, followed that. We're now the single largest investor in Kiva Confections, which is the largest edibles company in the US, single largest investor in Cann, which is the fastest growing drinks company, single largest investor in Raw Garden, which is the largest concentrate and vapes company in the US. Outside of brands and distribution, we saw that low-cost cultivation, at least at a point in time, was an interesting thematic to invest against. We ended up investing in a company called Clever Leaves. I actually sit on the board of Clever Leaves. It's a publicly traded company now listed on the NASDAQ stock exchange. But low-cost cultivation, for our viewpoint, only had a very certain window to invest into. The longitudinal access of cultivation is very important to look at as an investor because getting into a market early, you can make a lot of money, but you can also lose a lot of money. In fact, we have always said we think there are going to be more people losing money in cannabis than making money in cannabis because there's so much sort of Me Too follow-on strategies going into a commodity side of cannabis, and cultivation is certainly, from an investor standpoint, a commodity side of cannabis. The last area that we sort of in our quadrant that we focus on is technology. Technology in cannabis is really companies like Dutchie and Jane that are the software businesses that run the distribution platforms in the US. Technology is borderless, so it doesn't have any of the framework of touching the plant, and it can go from the US to Europe. So we found that to be an investable category. So I'll wrap up our history of Artemis just to say that we have been, I think, very successful in this very short term of cannabis investing, and the dynamics we see are only growing and being more compelling as we go forward. This next slide is how we talk to our LPs, both prospective and current, which is really now, we believe, is the best time to be investing in cannabis. We said this once before in January of 2020, prior to COVID, in the same sort of market dynamics where we've seen this sort of swan song of very high valuations, very high growth, followed by a crash in value. And much of that doesn't have to do with the cannabis industry. That's really based on the investor base. As we know, in the US, cannabis is federally illegal. That means that folks like Goldman Sachs, BlackRock Capital, Federated, Fidelity, they cannot invest in public cannabis stocks. And so when we look at the tail of the tape on the public market side, it has nothing to do with the growth curve of what the operating companies in cannabis are doing. I'll use GTI as an example again. GTI is a multi-billion-dollar company on a market value basis. They produce several $100 million of free cash flow every year. They run EBITDA margins at 30% a year, and they have a growth rate, a top-line growth rate of exceeding 30%, which is huge for such a large company. Yet it trades at a valuation that's less than 2 times forward revenue and less than 7 times trailing EBITDA. When you compare that same dynamic, if you took cannabis away and you applied those same fundamental operating statistics to a consumer packaged goods company, it should trade at 4 to 5 times revenue and maybe 15 to 20 times EBITDA. So when I talk about the macro of cannabis, and I talk about this with our investors, there is a fundamental disconnect, mainly due to regulatory environment in the US that has limited investors coming into the space, which means that the entire public market story of cannabis is based on retail investors. Those are small investors that don't have a deep wallet, that don't have the opportunity to sustain investable businesses. And so we see an entire sector trading not on the fundamentals of the companies, but really trading on the question, will cannabis be federally legalized in the US or not? If there's a rumor that it's going to be federally legalized, you see the entire market trade up. And then when things like the SAFE Act, which was expected to pass at the end of last year, SAFE banking was to allow cannabis companies to have access to the legal banking system in the US. That failed in the Senate. And when we see the failure of things like SAFE, the entire market trades down. So again, as a public market investor, we think it's a terrible place to be because you're subject to very small retail investors, no one that has capital and staying power. But as a private investor, it's one of the best times in the history of cannabis to be investing because you have a lot of targets, qualified candidates, and you have a valuation window that we think is really unprecedented to get into the space. So going on the global trends of cannabis, and cannabis is a global industry, we follow several different points of research, and it is undeniable that cannabis is a industry now growing at 20 to 25% a year for the next 5 years. If you compare that to the technology indices, biotech, there are very few, if any, industries that have that same fundamental growth curve coming into a new industry like cannabis. And as an investor, again, a private equity investor, there are very few competitors today that come into the space with a paradigm that can create value as we see the opportunity right now in cannabis. There's no money out there in investing in cannabis right now. As I said, most of the investors are small investors and they're tapped out today. And so today, right now, is probably one of the best times, either if you're an operator or if you are an investor, to be developing a business, because those businesses that can start and survive in this very sort of capital depleted market will be the ones to really survive and thrive in the future. Going to the overall TAM of the market, the access points now are over 1 billion people have access to legal cannabis in the world. In the United States, we finally reached, whether it's medical or adult use, over 2/3 of the US population now has some access to cannabis. If you look at Europe and combine 750 million people of an addressable market, Germany probably being the most robust opportunity, there is a very large and robust market already existent. When we start looking at frontier economies, whether it's Latin America, India, South Africa, or now here in Asia, the market is only expanding exponentially. And so again, our focus has been looking at the largest trends and the largest opportunities going forward. We are following the markets that we believe are going to be the most profitable and the most robust. As it relates to the US, this is where we started. We started in the US because it was, in our view, the fastest growing market at the time. It's really a state-by-state market. Again, federal illegality, state legality. We began investing heavily into California. California is a unregulated as far as limited licenses go, so it's a very difficult and tough market. Lots of competitors, lots of competition. But the funny thing is, it's not really competitors among the legal cannabis operators that we are concerned about. California is also the poster child of how not to regulate and not to deregulate cannabis, because in its deregulatory environment, California opened up the markets without having the opportunity of enforcement. And so we look at the US as a growth story that's compelling, that's strong, but with a lot of holes in it. The black market is very, very strong in the US because of the fast pace of deregulatory environment to get to decriminalization and the legal market, with a lack of funding and enforcement to really stop the low-cost providers that don't pay taxes and don't compete in dispensaries, but really are just guys on bikes. So while we look at the US as a very compelling market, we also see it has a lot of difficult points given how the US laws are structured today. So as an investor, while most of our portfolio today is in the US, we really started looking at Europe as a new frontier. And if the US is a market that started with a promise of medical, but as soon as the recreational markets came along, it quickly fast-forwarded to being a recreational market, the European market is actually probably for us one of the most interesting and strongest markets to invest into. It really, truly is a 100% medical market. We all know that Germany is working to open up the adult use side of their market, but even with adult use, Germany has a codified medical program that has reimbursement. And going back to my healthcare days as a banker, a highly regulated medical framework with reimbursement is nirvana to investors. Whatever happens in the German market with adult use is going to be sort of sizzle on the steak, but you can make a lot of money as an investor and as an operator in the medical market because you have a completely legal framework. You have access to banking, you have fair competition, and you have a pricing network that really right now is only lacking in data. Because to prescribe cannabis, you want to have doctors prescribing, you want to show efficacy. The data that's now coming out is proving that cannabis has true medical properties and an opportunity to not only cross boundaries, but to cross demographics. And we think that, that Europe is going to be very, very interesting into the future. As it relates to Asia, I'm here because the opening of Thailand, Malaysia, Cambodia, even the announcements, I guess 2 weeks ago by Japan that they are putting in front of the Diet new bills for medical access to cannabis. It is a very interesting but very wary time for us to be wading into investing into this paradigm. We find that Asia is really going to be driven primarily by regulatory changes. Thailand is ahead of most of the other conservative economies in Asia. But we believe that, again, large economies like Japan have codified medical programs that likely will come into play. We likely, as investors, will not play in economies that are completely open to adult use without strong enforcement and without a medical program. We don't believe that the open market is a good market unless you have some sort of regulatory framework that protects investors. It is a dangerous area to be investing into a place that has very little enforcement and a lot of competition from the black market. But we do see the promise of Asia opening up as the regulatory hurdles come down and stigma goes away. As we see the global trends that have happened in the US and Europe really coming to this continent, we believe that this will be a very interesting market in the future. I think that for all of us, what has been very astounding for cannabis is it's shown to be both recession resistant and pandemic resistant. As I said, one of our first sort of forays into making public statements about the cannabis market were in 2020, prior to COVID. And that was primarily based on valuations coming down after this fast run up in 2018, 2019. But what we saw during COVID is that cannabis is an essential product. It was deemed an essential business in the United States and in Europe. We found that consumers of cannabis were paying their cable bills and paying their cannabis bills before they were paying their tuition or before they were paying their rent. And so the cannabis underlying thematic is that it is a very resilient business in all situations, in all cases. And then where the future of cannabis is for us, and this is really where our exits are generated, because cannabis touches on so many different industries, from pharma to alcohol and tobacco to consumer packaged goods into really just supply chain dynamics. We've already seen on the medical side companies like GW Pharma, which was the company that brought Epidiolex to market. Epidiolex is nothing more than just highly rarefied CBD, but it did go through FDA trials, it did go through an FDA mandate, and Epidiolex is now a billion-dollar drug. It's the reason that GW Pharma, which had an entire portfolio based on the whole plant of cannabis, was purchased by Jazz Pharma for $7.2 billion about a year and a half ago. That was a watershed moment for others, but it's not any secret that alcohol, tobacco, CPG have all been investing heavily into the space. Where I live in the UK, BAT has been investing significantly in the legal supply chain for cannabis, primarily in Canada and in Europe. PMI, Philip Morris is not far behind. We've seen folks like Constellation making plays out of the alcohol industry into cannabis. AB InBev has been investing in small pilot programs in Canada and in Europe. So as far as exits go, as an investor, we care not only about putting money to work into a highly dynamic growth industry, but we're not only hoping that these companies go public, but they get bought. And we expect that alcohol, tobacco, retail, pharma, CPG, and ancillary will only increase their exposure and investment to cannabis in the future. And we've already had, I think, 2 sales out of the portfolio into these candidates. It's only going to increase. So if I can leave you with nothing more than the statement that if you're an operator, if you're an investor, you should be out there today putting money and time to work. The trends are in your favor, but there is a lot of difficult headwind that you have to go through, whether it's competition from the black market or a deregulatory environment that is slow to open up. There will be a lot of money lost in cannabis, but a lot of money made in cannabis if you're smart. So hopefully that was a good summary. I'm happy to take questions, and I thank you all for the time.